Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, February the 10th, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, Peter with the dollar index on the monthly chart. High level overview. We got wave 1 done, working on a wave 2 down. At some point, we're going to end and go breaking out. But for the last multiple months, we talked about this low not being likely the one. We'd make a new low. Then a few months ago, we said the same thing, looking at price action. We're going to make a new low. And the most recent one, we said the same, that we don't think this is quite finished. Probably going to push down into the lower 90s, maybe it's 93, 92 area. Then we could reassess there, but higher probability was we're definitely going to go lower. But just remember that at some point, this wave 2 will end, whether we go over our 3+ year ago target down here at 80, or we stop, which is unlikely here to go breaking out, but we go lower and we then reverse. Just remember, somewhere between here and here in this zone, high probability we're going to end up breaking out. And as we go to the charting platform, we can see, watch this level coming in to today, tomorrow, etc. The recent low up to the current high, we right at the 618 level. So if we can close below 96.50, a little bit of bounced a little bit, but above that 96.50, if we close below that, then it kind of sets the tone. We go on the 95, 94 and change, making a new low yet again. So stretch that out. I know there's a lot of lines on here, ladies and gentlemen, but this is what we do. Recent low, recent high. We expect that this is likely going to push lower. And if this push lower does close below 96.50, to be exact on this measurement, 96.48, which we're about 0.3 of a point. We close below that, then it says 75%. We're going down to a new swing point low, which would be 95.19 / 94.88 area. Certainly could push toward 94. But when we were looking at this of the bigger picture, if this is that wave count we were looking for, and this initial move down is 1, this is 2, this was 3, this is 4, and slight, just barely overlapped. Kind of told you about that 98 target. We went towards it and reversed. So that's okay. It kind of touched the bottom and then instantly reversed. So if this continues, this should push us down in a wave 5. And I'm thinking somewhere in this 93, 92 area is kind of a good place to be. All right. So could we just come down into the low 94, or say low 95, upper 94, and that could be the end and we bounce again? Sure. But this is just a logical target down here. Let's see how that plays out. So the bias is we should get more downside. We should make a new lower low. As we push lower, then we need to take aggressive profits on several things like the euro dollar to the upside, pound dollar to the upside, etc. So It's not a foregone conclusion that this bounce retracement should break down lower. That fits this bigger picture, getting the last push. And the reason we said that this is unlikely the end, that we're probably not going to make a higher low, higher high, and just reverse. I think what's going to end up happening, we're going to break down further, because typically if this is that wave 2 coming down to the end here, you typically don't end in a 3-wave correction. So that adds more credence and support to the fact that this should go breaking down. And we're rallied into the resistance zone and we reverse. The big resistance is the Magic Fibo. We didn't even get close to that. We hit up near this level we were talking about, around 98, instantly reversed. So again, if we continue to see this decline, last 3 days we had some red candles. If we continue to see that, you see us close below 96.50, 96.48 right there, then that's 75% chance we're going to make new swing point lows down here at 95.18, 94.88, etc. Got it? So this is why I said a long time ago, I didn't think that was the low. We had all this overlapping chopping action, which was corrective, that we expected a new low. We got it. And even on this new low being a 3-wave correction, the likelihood that that's over and we do go breaking out is very low, extremely low. Plus, add to the pros and cons. Pros of continuing lower or below the Magic Fibo. We have a 3-wave correction to end the recent swing point low. That's also a pro that we're likely going lower. And as long as we're below the daily Magic Fibo line, this big orangey line is extremely bearish. And we're in a downtrend, bearish. So the only way we start to get a little bullish is we need to break above the Magic Fibo, retest, and start pushing above this 102 where that short squeeze is sitting. That could give us momentum to pop, make a run toward that 105, maybe 107 level. But that's a long way for us to get up there. And in the interim, price action dictates that we're more likely going to keep breaking down lower. Amen? And when we get down to this target zone, I'm going to be sure to take aggressive profits, which we're already in a profitable position on the euro. We're in a profitable position on the pound dollar to the upside. And as this declines, those two should go higher. But it's possible once we get to this area, which would be from the big picture, we always like to show you this big picture, that's roughly a 50% retracement off of the prior move up, 50% retracement. So that's a good area to take aggressive profit. It may turn out we make another low, we do another kind of 3-wave correction, and we continue lower, and we continue down toward even further, maybe toward this 87, 88 range would push us more toward a 618 retracement. But it's certainly, as we get down there, worth the idea of taking profits on those trades that we're in a position of authority. Got it? So are we going to get a 50%? It doesn't look like this is the end between 38 and 50%. We're kind of dipped between the two of the prior low, which was back in 2007 at 70.53. 15 years later, we reached our destination. We talked about going to 115, 120. Years in advance, we talked about going there. And ultimately, we went to 114.72 on this platform. Maybe a little bit different on other platforms, but it's the same. It still went toward the target. Then we talked about 3+ years ago, hey, great opportunity. The dollar is going to have a big correction. The euro dollar is going to have a massive bounce. The pound dollar is going to have a massive bounce, et cetera, et cetera. So is this over? My humble opinion, no. We're going to go lower. How much lower? Well, we kind of got the target down here around that 50% retracement. We closed below, breaking the 38.2% retracement. We kind of been chopping in this zone. We're still below this level, which kind of dictates we're likely going down and testing this 30, 93, 92 area, which would be our 50% retracement. Fair enough? Then you go to the charting platform. We're below the Magic Fibo on a daily. We're retraced to the zone we thought we would probably reject from. We rejected. The next level of interest to watch is this 96.50, 96.48. We closed below that, which we dipped very close to that already. We got to a low of 96.60. So we're getting awfully close. So we dip below 96.50, 96.48, and we get a candle body close below that. Then it's then reversing the same scenario saying, yep, we're going to make a new low. And the probability we go at 95, 94 area is upwards of 70 plus to 75%. And I'm saying we're probably going to drift a little lower because this is a beautiful area to go to. How about that? So any questions? Any rally should be sold. We expect more downside. Therefore, we expect the inverse on the euro dollar. We're expecting that this correction is going to continue higher. We talked about this for months and months and months, even 3+ years ago. But on this recent bottom at 102, very strongly committed to we were going to go much higher. And we talked about these targets a long time ago. And I kind of took some of the lines off of here. But that recent high here to that recent pullback, we talked about that 190, 1984, 120.40 area with extremely high probability. We reached them, we pulled back, and now we're looking for more upside. And as you go out to a further time frame on a weekly chart, we can see why we think there's more upside. On this recent high here to the low, we broke the 618, broke the 786. We're clearly well above it, so we still have a 75% chance we're going to 127.40, 70 plus, we go to 130.80. And here's the big target zone up here, somewhere between that 127 to 140 area. That's kind of the plan. Likely we're going to break a new high at this juncture. So keep buying the dips, be in your position of authority like we've been in. After taking those profits, I warned you we'd probably get to a little pullback. Now the bias is the dollar breaks down further, the euro continue higher. So my longer term targets is this 127.40, 130.80 area. Fair enough? And you come over here to the software and we can see we're still in that position of authority. We're up at 300+ pips. We took over 400, got the little pullback, still looking for that 127, 130 area off of that extension. That's right here. So Emil, where do I get these numbers from? Ladies and gentlemen, I get them from extensions. And you remember there's an area around each extension. So I typically don't set it to the exact number 127409, 13808. I make it into an area. So I just kind of rounded it off 127, 130, close enough. And I expect to see that in the weeks, and could take weeks, could even take a month or two. So there's no rule to say that because this is my target, a 75% clip, that we have to go up there in the next few days, the next couple of weeks, or even the next couple of months. But so far we've been spot on. Let's go out to the bigger picture. When the euro bottomed at below parity, how many years did we talk about when the euro was up at 160, all-time high? And I made a bold statement, not a prediction. I'll leave that to the prophets, but a bold statement saying that the euro was going to go below parity. It took 15 years, and I didn't know at the time 15 years, but it would head that way. And sure enough, we got the low in 3+ years ago in September of 2022, going on almost not quite 4 years, 3.5. We're now in February 26. But you get the point that we said this is going to reverse, make thousands of pips, and we were looking for some sort of retracement of that bigger move. So when you take that bigger move, what are we talking about? All-time highs down to recent low of this 0.95. We're looking at somewhere between a 618 type of retracement. That's 136.90. What is our target? 127, 130. So there's more targets to the upside, but notice your 0.5 right there is right at 130, 129.69. So that's why my additional take profits is at that 130 area. Can we continue towards 136 or even push the limits higher toward maybe that 140? Maybe. Up and until price proves otherwise, keep buying the dips, get to your position of authority, and keep letting this thing run. We've been in the trade, even shorted it, went long, shorted it, went long, and been trading this thing in all directions for a long time. Just like I was short this thing in some accounts for many, many, many years looking for below parity. And ever since 3+ years ago, below parity down here, we talked about, hey, go long and keep buying the dips for years. It would take years for this correction because it took so many years for that move down, right? And bigger picture, if you want to know my ABCs, 1, 2, 3s, you look at this bigger picture, and what are we looking at? We're looking at a simple correction that's taking multiple years, but this, actually, let me condense this a little further. If we get up that high, this A going up into that B, then we're going to come back down in C. That is the plan long term. And I did say back here, this would take multiple years for this correction to get up there. And once it gets up there, it'll probably take multiple years for us to come back down. For those of you looking long term, still think there's more upside. We just went through it. I don't think this little reverse doji here, we get those from time to time. We get corrections off of that. You know, when that happens, here's one there. It was green, but it's still in a doji reversing. And then we got a correction. This one, we did the same. We got a little correction. But that doesn't say it's a terminating move just yet. I still think there's more upside, and that is the plan. And again, how much further are we going to go on that euro? Well, based on this weekly, 127.50, 127.40, 130 plus. And could we continue toward that 136.90 up here, 137? You betcha. And could that even push toward a 786, somewhere between that 140, 145 area? Still possible. Amen? But the highest probability at this juncture is 127, 130. Since the last pullback, we reached our extensions. So we go at the next pullback. That's up here at 127, 130. Got it? All righty. What about the pound dollar? Kind of ditto. We're expecting the pound at all-time highs. We said it would make a move down into the low one. I was kind of thinking teens. Well, this thing overreacted, in my humble opinion, went down to 103. This was salivate country expecting this to get another big bounce. Again, none of these, when we got these lows, were expecting to go break out to new all-time highs. It was simply a correction before another push lower. That's kind of the plan. All right. So 3+ years ago, we made a statement, said this is going to bounce, it's going to make thousands of pips, and it's going to take multiple years. That's what the technical picture was screaming. And where do we think we might run on this one? Well, our next upside targets, based on the same recent high to low, is this 147, 152 area. That's already been decided based on the high to the low. Took out the 618 around that 127.50, took out the 786 around that 133.90, and you can see we're well above it. We were even higher as we pulled back, but the plan is this is still a high probability, high viable target, 147, 152. So what does that mean? That means we're in it to win it, right? We're up over 483 pips, took profits at 586. Have my target at 142, 152, kind of in this area. We can move this where we want it. It is on-screen programming, so I can move this higher if I think it's going to make a move toward the 160s up there. If not, you think it's only going to come maybe toward the 150s up here, then you can move on-screen programming. For those of you that want to be exact based on your maybe extensions, 147, 152. So you can come back to that same chart and say, okay, I want to make this exactly 152. So you can left key click. So you see these little dots right there. When you see that, you can right key click, go to trend line properties. And then within here, I can set it under parameters. I can set exactly where I want it to go to the tick, 152, right? 1.5200. And then we'll do the same thing down here, 5200. And then notice as soon as I click OK, this is going to change that number right there, big cursor, that number right there to 152. And say OK. We get that out of the way. And there you go. It'll update 152. All right. So we're in a position of authority. We already took profit. If this thing goes tanking, say the dollar index just goes ripping higher and this thing goes tumbling lower, worst case scenario, it pipped us out. We're already banked profits and it'll pip us out for more profit. And the good news is we already moved our stop loss deeper into profit. You can see we're up 482. We got a stop loss 200 pips away. So even if it did that, we'd lock in hundreds of more pips of profit. The monthly, if you'll recall from our archives, back when we hit this 103 low down here, my monthly was oversold. We had a weekly oversold. We had a daily, multiple time frames oversold. We made that bold statement. We're going to rally thousands of pips over the next several years. And what did I do? I drew the Picasso. I knew exactly what the software was going to look like years in advance. Right, Ian? We said this would end up cycling up, and when it got there, it would start slingshotting higher and higher and higher for us to get to those targets. And sure enough, that's what exactly it has done. How about that? Talking about trading for many, many decades and learning the process of what the software looks like in market conditions, God-given talent to read and interpret price. So continue to buy the dips. I think the dollar is going to continue to break down, highest probability, and this will continue to break out, highest probability. All right, let's continue. What about euro yen? Euro yen with this crazy market. We had a plummet in the market. We had a rip the other day, and it's been chopping and grinding. But we're still in a position of looking for this to go lower. Why? Monthly overbought, weekly overbought, daily overbought, and they're all in the same boat. And let's check this out. We'll go over here to NinjaTrader 8. The software runs on NinjaTrader 8. And we'll go to this is the dollar yen, but we'll look at the euro yen. Euro yen. And you can see the euro yen. Why do we think there's an opportunity for some more downside? Monthly's extremely overbought. PAI starting to turn. We got the weekly overbought, starting to turn. This is a good sign, Emil, more to the downside. We had this PAI hook and cross. It started to push lower. We then engaged up, where we call that a slingshot. What is a slingshot? When the red and or red and blue races off from green money flow and then snaps back. We did pop up to a lower high. Now we're disengaging. So this little phenomenon we call slingshot, engage, disengage, where you can see it. The red hooked up, blue hooked up, green turned. And what happened? It then turned back down, turned back down. We call that engage, disengage. So what does that tell us? High probability we're going to get more downside, but that price is going to go back to the swing point low and make a new low. That fits the mold. Monthly starting to turn, weekly already turning, and the daily is cycling and even slingshotting lower. Check it out. So the daily is cycling, is turning over, slingshot lower. So the plan is in the coming days that we're likely going to see this push lower, and we'll get the daily to cycle, the weekly continue to push, and price continue to break down toward this low and make a move toward that magic Fibo, looking around that 178, 176. Just looking at the magic Fibo on the chart, yes, that's included with the software. This magical line is everything you need and then some with the software. So this is a high probability target, and the days could take weeks, might even take a month. I don't really care about the timing. I just know a higher probability was to play out. So Emil, you come back over here to this chart, you say, okay, well, what are my targets down there? Well, there's many ways to look at it. Target's going to be from the recent high to low to the lower high. Let's fix that, move my arrow to this lower high. That sets the tone right around that 180, 179. And notice where the magic Fibo is sitting. It is sloping upwards. So as this is expected to drift lower in the coming days, weeks, and maybe even month or so, we're likely going to go breaking that low. And as we start breaking the low, you can use several different methods. You can use this 3-point tool or just straight up. What does the 2-point tool look like? That is this recent low. Remember, you use the control key, and that recent low up to this recent high, you can see we have overlapping area where we have a 75% chance we're going to go visiting that 180, 179, overlapping 180, 179, 180 area. So highest probability where this guy is targeting. Oop, I didn't mean to move that. I want to move this, not that. I want to move this guy. Yes, that's what I want to move. That we're likely going to see this push down into this 180.79 area. And because this is sloping upwards, no reason to believe that we won't start to get sucked and pulled toward that magic Fibo. Fair enough? And then do we get a bounce to break out, or do we get a retracement for a continuation? So this is why we're going to take profits. If you short this, like we've been talking about, we got in, got pipped out, got in, we're in a position of authority, looking for more downside. That is the plan, my friends, and I'm looking for more downside. Pound yen, ditto. We get in, we make profits, and we get pipped out, we get back in, we get to position of authority, expecting more of the same. This looks like similar to the euro yen. What does it have in common? The exact same thing. That is, all of the time frames are at extremely overbought condition. So from the euro yen, you go to the pound yen, and our pound yen is looking very similar. And notice this daily, we're already engaging and disengaging, and we have divergence. So check it out. We have a lower low on the software during that slingshot, and we made a slight higher high in price. That's what we call negative divergence. Price made a higher high, software shows a lower high, and now we're disengaging. So the same rule, just like the euro yen, we have this prior swing point low, and we're likely going to make a new low. And what's sitting down there? The magic Fibo. Huh. Thing of beauty. So you come over here to the charting platform and you do the same. Well, if this is the low, that's the high. Today's the day. Emil, we close below 211.60. That's my 618. Then it has a 75% chance we go into 208.80. 70 plus, we go to 208.13. And where are these levels? New swing point low. Here's the initial target. We got the magic Fibo traveling there. So I would see that we're likely to get sucked even further down toward that magic Fibo. And let's throw one more in the mix. I can do it over here somewhere. And that is our Russell 2000 trade, still running, made some massive pips on that. Still looking for more upside. But let's go over here and do, I'll change this chart to the pound yen. Pound yen. There he is. So you drag that over there and let it update. And we can see what else is in that same ballpark. For those of you that like, as I do, Ichimoku cloud. We got the cloud down here. And this is why you need, when we get down here, again, we expect to make a new low. And when we start getting toward the lower half of that cloud / Magic Fibo sitting up there, we're looking for this to take profits. So my daily should continue lower. That's a thing of beauty. The weekly, turning over, engage, disengage, just like the euro yen, the pound yen's doing the same. So that means more downside based on a weekly. And even our monthly is feeling the heat, baby, feeling the heat. And if you look closely, we did get a higher high on that slingshot, and we still have a slight lower low on the software. Divergence even on a monthly chart. I like it, right? Divergence on a monthly chart, engage, disengage on a weekly chart, and we likely potentially could come back to where we engaged up on the monthly, which is way down here in that 180 area. That is thousands of pips away from where we are currently, right? Look at that, 210. That's a long way. Long way, my friends. A long way. So we're talking almost 3,000 pips to get down to this low. And how do you know that? If you don't know how to add the 2 point this and that and subtract, you can use this tool here on the charting platform, and we'll come back to where that low was, down here in the 180 from this low over here. And we can look at the current price action, where we currently are, and you'd use this to go down, price, and you can see that this shows down here. Let me pull that over some more. About 3,100 pips or so. See that? Minus 3,168 pips. Not too shabby. That's for us to get down to this low. Am I guaranteeing that's my A, B, C we've been talking about for months? It's certainly possible, certainly even probable. But we're talking about, let's make 1,000 or so pips just to come to, well, to Magic Fibo, we're talking another 500 pips. From where we were, it's going to be right at 1,000 pips from 215 down to 205. That's not too shabby. We start breaking the Magic Fibo, then if this is that bigger picture, and why even bring this up? Because that's a high probability, looking at the charting platform, that this impulsive move lower, right? Big impulsive move lower was due to the last big push for the what? Carry trade unwind. And we were in a big move up. I'll go over the history of this in a moment. And then we moved down. But since that big impulsive move down, what have we done? We've chopped and overlapped and chopped and overlapped. And even since we did this chopping, overlapping push higher and made a new high, all of this represents that this is probably the A. And all this overlapping, chopping, grinding looks like a B. And likely we're going to come back down near that 180, 185 area in a C. And we call this an expanded flat correction. And that, my friends, would be thousands of pips to get down there. So we're talking potentially 1,000 from where we just topped out to the Magic Fibo, we're talking 2,000+ more to get down near these lows. And this is still a high probability until price proves otherwise. Amen? So I tie all that in with a monthly overbought, a weekly overbought, a daily overbought. That's the edge you get with the MPA PE5 version 5.0 software and my God-given talent to read and interpret price on a chart. And we give you upside targets, we give you downside targets based on the move. Well, go back a handful of years ago, about 6 years ago now, when we hit the COVID low over here, I made a bold statement saying the pound yen is going to make a run over the next several years. So here was COVID low. Over the next several years, we were going to make a run about 8,000+ pips from this low to go test this high and make a new high. I said that back during COVID in 2020. And I did tell you it would take multiple years to do it. So, been spot on. I was a huge proponent of being long the pound yen, even with the carry trade. When our interest rates and the euro interest rate, pound interest rate was all higher, the yen was at a negative interest rate years back. We talked about this going much higher, not only being a lot of pips, but also the carry trade and bonuses. And then that's why when this carry trade started to unwind, this thing crumbled. Well, the yen is starting to raise interest rates, and we may see this thing continue to crumble. Then you go back in history during dot-com bubble burst, when you get a financial crisis, the yen strengthens and this thing plummets 9,000 pips. 2007 financial crisis, 13,000 pips. So Elizabeth, I'm coming to join you, honey. That's the next financial crisis. This year, next year, whatever it is, we have a history of what does the pound yen do, or yen base pairs, what do? The yen tends to strengthen. And sure enough, got the big push. So can't tell you what to do. No buy, sell to hold recommendations. I'm not a certified financial planner. If you desire one, hire one. But remember, nobody cares about your money more than you do. And then maybe next to that would be, I care that you're successful. That's why I go to bring you this brilliant software and my God-given talent to read and interpret price on a chart. And I spend so much time each day during our classes to go over exactly where I think things are going and why they're going there. So Emil, if this ends up being, ladies and gentlemen, this now zooming in more current price action, that recent pullback, which again doesn't look like much, that was 2,700 pip. Carry trade unwind back in July of last year, well, in 24, a little over a year now, but that was a big move and it was impulsive. All this overlapping still says this is probably the A, the B, and the C. And if it does tie into during this journey downward over the next multiple months, year, whatever it takes, that we do get the financial crisis and we get a plummet, this thing could plummet thousands of pips like it did back in dot-com bubble burst in the 2007 financial crisis. And what's going to be the reason for the, Elizabeth, I'm coming to join you, honey? Maybe it's commercial real estate, $5 trillion bubble explodes, fiat currency failure, World War III, could be a lot of different things, but it's inevitable. When you're sitting there pumping 39 trillion in debt, that's not good. It's 38.7 now, pushing toward 39 trillion. Insane. When you look at the federal spending, 7 trillion versus bringing in a little over 5, something's amiss. You got credit card debt way out of whack. It's insane, pushing trillion plus right there. Credit card debt, 1.3 trillion, which is insane. So something's going to give. And when the cracks in the foundation are being shown and evident, a market crash is inevitable. It's not a matter of will it ever happen. It's a matter of when it happens. And if we're in that pound yen trade, when it does happen, you're going to add thousands more pips to your bottom line. And again, I like that, needless to say. So can I guarantee we're definitely going lower? No, but I've been saying it monthly, weekly, daily. What do these things have in common when you go back to these financial crisis moves? Every one of these, when we were way up here, monthly, weekly, daily overbought, monthly, weekly, daily overbought, monthly, weekly, daily overbought. And then when you're at these lows, monthly, weekly, daily oversold, monthly, weekly, daily oversold, monthly, weekly, daily oversold, et cetera, et cetera. Got it? So this whole big move, when I made a statement back in 2020, we were going to go thousands of pips over the next several years. And we went from 23 to 95, ended up going to 208. There's your 8 plus, pushing almost 10,000 pips. That's not too shabby, to say the least. And that's why we set that up. That's why I'm setting it up, coming back down. All right. Dollar yen still kind of chopping and a grinding for those that like the dollar yen. Zoom in on price action. The more the dollar declines, the more the dollar yen should decline. And sure enough, this looks very similar to the dollar index. We got a big push lower. We bounced, went to the rejection zone, got immediately rejected and pushing down again. So watch the targets. We can take a lot of these lines off. For those of you, well, Gary, I'm a short-term trader. I'm more interested in, not months away or years away. Even though I appreciate your long-term outlook, I'm more interested in shorter-term targets. We'll clean this mess up, and I'll just leave that because it showed we went from the high to the low, went to that 618 zone, got rejected, and now we're pushing lower. So what do you do in this example? Well, you can stretch this out. You do your 2-point tool. You go from the swing point low up to the current swing point high and check it out. Emil, James, Ian, Mr. Tucson, ladies and gentlemen, right now this candle body is below the 618. If we close there today, then we have a 75% chance we're going down to 150.130. 70 plus, we go down to 150.68 on a beautiful rejection from the battle zone that we expected it would rally and fail from. Now we're looking for new lows. So if you're more conservative and you want to wait for an absolute confirmation and give me that 75%, this candle body needs to close below, not a wick, but this body closes below that 154.30 area, which we're testing it right now. We close below there, then it's game on. Could take days or even a week or so to get down here. I'm not saying as soon as it closes below, then that means next couple of days you're definitely going to reap the benefit of about 300 to 400 pips area, but it's a high probability outcome. As the dollar is anticipated to go lower, this will go lower and will push to go lower. Amen? All righty. Enough of the Forex. If you have any other Forex pairs you want to look at, just let me know. I'll review anything for you. But let's go to the markets. What about ES? My E-minis. What can I do with my E-minis? E-minis are bullish. NASDAQ is bearish. They're kind of separating the deal. All right, how do we know we're looking bullish? Well, again, I'm going to take all this off just to show you, because I know you look at this and go, man, there's nothing but lines and colors. I can't see what you're looking at. What in the world? I'm going to just remove all this real briefly and just go with the current price action. I expected, and I even mentioned this in our lineup, not that one, this one, that market pullback is underway. And last week, we expected that correction, and then we wanted to look to buy the dip and then take aggressive profits. Buy the dip, take aggressive profits. Amen? Why was that? Well, we needed some depressurization on this chart. We got it. We came down just shy of the Magic Fibo. I was hoping we'd see the Magic Fibo, but we didn't. And we got our software reversal down here. And now, why do we think this is more bullish at the moment? Well, you come from the recent high, which is that guy right there, to the recent low. And we can see right now, Emil, yesterday, actually the day before. This is today. But Monday, when we had that big reversal, we closed above the 618. Aha. What does that mean? 75% chance we go and visit 7084. And let me make sure I'm at the exact high and low. Remember, you use the control key and then you push that and it'll lock it in 7043. And then this down low, you do the same. And now you have the exact number. If I take this level and I look at the low, it says 675150. Look at my level, 675150. And then if I look at the high, open, high, low, and close up here, and I put it on that candle, the high was 7043 easy even. Look at it, 7043 exact. So that puts you as a magnet. That gives you the exact numbers. So we closed above on Monday. We closed right at the 786 yesterday, which is slightly above. The exact number was 6980. And where did we close? We closed at 6983. So Emil, we got a 75% chance we go into 7085. 70 plus, we go to 7122. And then yesterday's body candle closed above the 786, which reconfirms 75% we're going to 785, 70 plus we're going to 7122. And this looks bullish, right? Plus, from our prior move over here in October, we broke all-time highs a few times and projected to do it yet again. Now let's contrast that to the NASDAQ. Money has not been flowing into big tech right now. Right? Maybe it's the software services that took the big hit because they're talking about, well, we can just get a Apple computer, M3, M4, M5 Apple computer, and they can write code for me instead of paying software subscriptions. You can just get your AI to do your own software, and you don't have to pay these subscriptions to all these tech companies and software companies, etc. And they took a hit because of that. Well, this is showing back in October was the last time we had all-time high. We came awfully close, but we didn't break new highs, where ES has broken new highs multiple times. Now look at the difference on the recent run. We're at a lower high. Amen. We're at a lower high. And since October and this most recent pullback, we did, in fact, hit the Magic Fibo. How about that? We hit the Magic Fibo and we bounced. What did the software do there? It's reversing. Watch this. Come over here, go to our NASDAQ first, which is right there. We got a beautiful daily reversal. PAI hook, boom. Isn't that a thing of beauty? So this is why we went to Magic Fibo, the daily PAI hook. We said right there, buy PAI hook from oversold territory. Well, what if I'd have bought that, even though the NASDAQ hadn't broken out and it still looks a little bearish? That's where this idea of tap comes in, right? That's where the tap comes in to take aggressive profit. Buy the dip, get to a position of authority. So, Mr. Tucson, we're going to go breaking out or are we going to fizzle and go lower? That's why you want to be in a position of authority on this. And we need to break above this pink box. The ES is already broken above the pink box, right? When I told you we closed on Monday above the 618, yesterday above the 786, just 3 points above it, but still above it. So it states we're going to go to the extensions. Well, this one, we're not there yet. So be careful. It's possible the NASDAQ could possibly need one more flush before we do go bubble hunting up there. Still definitely think we're going to make all-time highs before we're done. We do have a higher low here. That's somewhat bullish. And it bounced off the Magic Fibo on the daily chart. That's still somewhat bullish. But that's why when we're running in toward resistance, if I'm long on this, I want to be in a position of authority and looking to take some profits. Amen. And if it does close above this 25,680 / 25,980, 618,786, we start closing above that, then we got a 75% chance we go into 26.6, 70 plus we go into 26.8 and pushing on towards 27,000. But what would happen if we get this to turn down and the next thing I know, we're sitting down here at 23,000? Back the truck up and look for this thing to go ripping, right? Because the technical picture would say maybe we do get that last flush and then we're still going bubble hunt. Whether we break out now to go bubble hunting, we come back and do a 618 retracement off of the bounce, do a 618 retracement, and then go, or we tank, we're still going. So technically speaking, all roads lead to us pushing toward 27,000, right? But be careful. That's why in this area, you're in a position of authority that if we do go tanking, then I could take my profits and then rebuy and look for a lot more profit back to the upside. Check out we'll go to Nikkei first, our global liquidity. Hey man, what did we talk about? This thing was likely going to 58,000. 60,000 is the bubble. And just the other day, we had this big, huge doji, and we're trying. So if this thing continues to break out, it's pulling ES. But what's interesting, I was expecting NASDAQ to go with it. ES is breaking all-time highs. Nikkei is breaking all-time highs. The Dow broke all-time highs. We'll look at that in just a second. 50,000. Who could ever dreamed the Dow Jones would be at 50,000 and counting? I did, right? I kept telling you, Dow's definitely going to 50,000 and higher before we're ready for the Elizabeth, I'm coming to join you. But everything's pushing, but NASDAQ is still lacking. So what it leads me to believe, this NASDAQ is going to start ripping at some point. Today, tomorrow, next week, next month, next year. It is going to start ripping to catch up with everybody else. Since we topped out in October, the Dow broke new highs, the ES broke new highs, even the IWM broke new highs, but who didn't? Tech. Interesting how that is the case. And you can even look at the Russell. Even Russell back in October here, it broke new highs, and yet again, and the Russell, just like ES from the recent high to low, this one's setting up a chance to go up toward 3,000, 3,100 level. And we're at 27. That's 300 to 1,300 points. Not quite 400 points, excuse me. 300 to 400 points, sorry. Getting ahead of myself. But the target up here is at 3,000, 3,100 level. That's where I think we're going. No question. So you look at the most recent price action. We've been doing this from recent high to low. We reached extensions and then some. We pull back. Now we're closing above that 618. So I want you to focus. I'll take all these off for the second, just so you can see what this looks like. Remove this one. We did the same from the recent pullback, hit extensions, pullback, hit extension. We hit our confluence of events, this high to that low, hit it, that high to that low, hit it. And confluence of events, we warned you about a correction. Now look at where we are. We have the recent high, and again, use your control key, hold that down, and then move it to make sure you got the right numbers. And this one on the high, you do the same. And yesterday, we did in fact close above that 618 level, 2679. That candle body says we got a 75% chance we're going to 2775, basically 2,800, 70+%. And this opens the door toward that 29 and upwards further toward that 3,000, 3,100 zone. All right. So here's the target zone up here for Mr. Russell. Well, I don't trade the Russell, I trade the IWM ETF. Well, that's going to push us toward that 305 target. But first things first, we talked about this the other day. We're going to be targeting that 275, 280, 290 area. Where we get that from? Again, let's remove some of these lines, let you focus on what is the current price action. But this looks very bullish, even on IWM, as you would expect. Recent high to low. We took out the 618. We went where? 618, 786, 1448, 1272. And we talked about, because the confluence of events with this high to that low, we had a 265, 266 target. From that high to that low, we had a 266. We talked about confluence of events that we were likely going to go there. We did, and then a little some. We came down and did a 618 type of bounce, right? That's bullish for more upside. And if that's not enough to get your interest, I'm going to remove that. I'm going to remove this. And I'm going to show you most recent price action right here, Harold. We have a high. Again, use your control key and you get the exact number. That high to that low yesterday, get my arrow going. Yesterday, we closed. Let me see if we closed right at it. It looks like right at it. The close yesterday was 265, and we're right at the 618. So we didn't officially get a close above the 618 yesterday. Well, yesterday we did, sorry. That was the day before. But this one, the high is 267. So this, my friends, that candle, I was looking at this candle right here because it was right at it. This candle did close from the recent high to low. That candle did close above the 618, telling me I got a 75% chance we're going to 274, 70 plus plus, we're going to 276, onward and upwards, 281, followed by what? My target. 290, 305 area is the target for this baby to stair step its way. It can reach these targets, get a little stair step, maybe go up to this one, get a little retracement. But the plan is for this thing to grind higher in the weeks to come up toward that 300, 305 area, targeting first off 274, 276. Amen? So short-term traders, you got several points to get to those targets. Then we could target the 280, then the 290, then the 300, 305. Any questions? Check out the Dow, whether you look at the ETF or the Dow itself. We did break all-time highs. Go back to that October move. A little bit different on this one. It was November we were up here, and then we broke out where everybody else was October. This one actually broke in November, a little bit higher earlier than everybody topping out here, but they all broke, everybody but who? NASDAQ. ES broke all-time highs from that October high. NASDAQ did not. Dow did. IWM/Russell did. So 3 of the 4 big indices broke all-time highs, where Mr. NASDAQ did not. So that tells me we're likely going to get this thing to go ripping sooner than later, but no later than later. But all I can say is, Harold, I don't know for sure we need this before this is cleaned up, because this is a lot of overlapping, chopping action in here. We may need this to clean it up to get there. All I can say is if I get any alert that Mr. NASDAQ is trading down in the low 24,000 / upper 23,000 or lower, say 24,000 or lower, I'm buying the dip, buying the dip, buying the dip, buying the dip. And because we bounced off the Magic Fibo, that is bullish. Even though we got some overlapping action, we got a higher low. That's good. That's bullish. We're above the Magic Fibo. That's bullish. We just haven't crossed across the 618 like the ES has to go higher, the Dow has to go higher, and the Russell has to go higher. So keep an eye on this box up here. So let me zoom in on that, let you see exactly what that is, and I'll zoom in real big so everybody can see those levels. So if we get the NASDAQ to close above that 25.7, it kind of sets the tone. We're going to go there to these targets. We're not there yet. And once we close above that 25, say 26,000, official numbers 25,882, 25,982, but we close above 26,000, writings on the wall, we're going to 27. All right. So shorter term targets, longer term targets, bubble hunting. Is this going to be the one that does it? Or do we need to fizzle down here, then do it? All roads say we're going up there. Pay me now or pay me later, we're going up here. That's why bounce, be in a position of authority. Just let it go. If it turns out and it pips us out and we go lower, then I'll salivate and buy it again. Because the plan is to go bubble hunting before it's done. Any questions? So, not up very big right now for the NASDAQ, 24 points. ES, 11 points. It's still grinding its way. So that's why we're in a position of authority. But the plan is in the next several days to weeks, we're going to go up towards 70.85, 71.22, probably push towards 7,200 where my bubble's sitting up there. So is it possible we could even pull back to 618 to get up here and then pull back, retest the breakout to get there and even pull back before we finally get that last push? Yeah, certainly. Or it could just go ripping. But that's why you buy the dips, you get to your position of authority, and when you see these type of retracement 618 moves, highest probability it goes toward those targets, 75/70%, which is extremely high probability. And we rinse and repeat this thing over and over and over and over based on price action. I warned you going in the last couple of weeks, we were due for this. Man, we were due for the correction. I was just hoping we'd get a bounce off the Magic Fibo like we did the NASDAQ. We just didn't get it on ES. But this latest move up is bullish. We took out the 618 and the 786. So these targets are extremely high probability. Again, just to reiterate, NASDAQ is bullish because we bounced off the Magic Fibo. We're at a higher low. That's still bullish, but be careful up here. This could easily get turned down for one more push. And again, I'm not saying it's definitely going to happen, but if it does, and you see NASDAQ below 24,000, pushing 23 or lower 23, even 22, that is big time opportunity to buy that dip because the target is still the target. So whether we break out now, this is the target, or we pull back lower, still the target. Got it? All righty. So any questions on the current markets? Current markets, again, look at that big rejection up here in the Nikkei, and then you look at this Nikkei here, that's the futures, and then this one here, both are setting, we went to where we needed, this one hit 61,000, the other went up to, futures went up to about 58,000, but we still got more upside. I just kind of curious as to why this has been ripping, ES has followed, Dow has followed, Russell's even followed, but Mr. Nas is not. So maybe we need that last thrust lower on the Nas before it goes ripping, but I still think it's going to catch up. And it too will be at all-time highs before too long. All righty? And this may be it. I mean, we did bounce off the Magic Fibo, even though we're below this resistance zone. Once we clear this hurdle, all roads lead to all-time highs. Amen? All righty. Let's continue. We got a few things setting up, and of reference and of importance is Mr. Hood. Where you at, Hood? The Hood, after a beautiful retracement, gorgeous retracement, this thing is setting up for a potentially large move. And yes, I believe earnings are this afternoon, Tuesday the 10th at the close. So, I think this thing, based on this price action, we're likely going to pop toward this 105 area. Now, I'm not trying to tell you, hey, go out and buy some options today, because what if we're wrong and you get the short-term options to take in, it's going to be high volatile with the IV so high, it'd be around earning. You can get that IV crush coming into it if we're wrong. So whatever you buy could easily expire worthless. And then this is a logical target it's going to move to. That's what I think based on the price action. But look at this bigger picture. And it's setting up beautiful. From this low up to that high, we got that beautiful 618 retracement. I like it. Right? So far, so good. I like that. We're below the Magic Fibo. So, like we talk about, you're below the Fibo on a daily chart. That's kind of bearish more than bullish. So once we start breaking above the Magic Fibo, you can see from that swing point high to this low, that's my 618 level. We break above the Magic Fibo, then we're starting at 147, 155, 178. On the bigger picture that I'm looking for, use your 3-point tool. From this low, and again, I'll use my control key, from that low up to this high, to this higher low, I can grab it. Now we're talking some massive move. This low, that high, 618 bounce. Again, I'm not real bullish. There's a potential for some massive move higher. We're at 86, and with this 618 type of bounce, we could go up to 200, 270. Wow. That's more than a double. That's like a triple, right? How long could that take? Well, based on the grind, it could take quite some time. 27, maybe even 28. You kind of go like this scenario, and then you move this out into the future. And that could put us out into late 26, maybe even 27 to get up there. And this thing at that trajectory, if we get to the 272 target, we're into mid or so 27. But this is setting up beautifully. And based on the last earnings, they did pretty well on their earnings potential. They beat expectations last multiple times. Last one here, they were slightly off. So back in October 24. So all of 25, they beat expectation. And looking at 26, let's see, the last one was 127 billion. They're looking for 135. So I'm not trying to tell you, I know the future. It's definitely going to beat expectations. And because it does, it's definitely going to go higher. We've seen some of these that beat expectations, but yet they still get a nice pullback. But this one is setting up for potentially going 170 to 270. And I like the bigger picture, low, the high, the higher low, using the 3-point tool. That puts us equal move. Even if this is like a 3-wave correction, this would be the bearish target, 195. That's still more than a double. The bullish target would be a triple, getting us up in the 200 plus. How about that? So keep that on your radar. What's a way we can trade that without buying $86 a share? You can use the hood. What is that? Hood, what is it? There's one that's hood C, hood D. Where's the, anybody know the 2 leverage? There it is. Robin, 2x leverage on hood, T-Rex. What else is in here? Hood X. That's crypto cap, not that. Hood U, there it is. Drexon. Hood U, hold U. 2 times hood. So we could potentially look at, if you believe in this target zone, that we're going to get this big bounce over the next few years. You could look into HODU for that 2x leverage. And we're down at 12 bucks. This is a new entity, obviously. Hadn't been around. They do pay a little dividend. And we'll get another one in March, I guess. December, yeah, we should have one in March. So again, I'm not trying to tell you what to do, but this is a way you can buy shares at 12 bucks as opposed to 80 plus bucks. And what if that happens, Emil? What if, Mr. Tucson, Hood does reach that target zone? That would be in excess of, from this current where we are, kind of the low where we are, that would be in excess of about 200%. We get near that 2 area, 260-ish. So about a 200% gain. So if you do the math times 2, you come back to HODU, hood U, if you like. And we do that, and we run it from this low down here to a 400%. That puts us about $46, $45 range from 12. That's basically a quadruple. Not too shabby. Now, again, I'm not trying to tell you, go out and buy this right this second, because in my humble opinion, earnings this afternoon are going to get a pop tomorrow, and that means this will pop times 2 and get the party started, and it's going to go up every day without ever having a correction and go zooming into the 40s. It could, but the plan is probably to take a little bit longer than that. Could even take 26 into 27. But it's worth my attention. That's why I like to call some juicy trades that are setting up like we did METU and Meta. Setting up, bounce, bounce, looking for bigger upside, that 1100, not on METU, but on Meta, that 1100, 1300 up here. Amazon got a bigger pullback than I was looking for, but still held our 618 zone. So we got the bigger picture on the shorter term targets up here. But if you look at that, that sets Amazon from the low to the high to this higher low, 311, 323, nice little bounce up there. 350, 3 to 400 anyway, potentially setting up. That's why AMZU, we talked about it, that maybe you want to buy a little bit of that. A couple of shares here and there could move drastically higher. So I'm going to go ahead and add the hood in here, and the hood U plus. So we'll add hood, and then we're going to add the HODU, Drexon 2x leverage on hood. and that one. So we'll have a few of these in the system. I don't know why it always puts it down here, but I gotta drag him back up to the stock section. I guess we'll put it toward the bottom below the Magnificent Sevens. Come on. All right, I'll just drop you there, and then I'll move you down a little bit more right there, and then go back to my hold you, drag you up there. So these I got my eyes on. UNH setting up as well. Talked about that. Got a nice pullback and sell off. It's due for a bounce, potentially looking at this. Hood U, Meta, TSLL, got that already in it, already in it. I don't know if I bought those yet. Did I buy those yet? I think I had a resting order. I got to check and see if it was filled. And all of these are setting up for potentially much bigger moves upside. Amen? Any questions on that? But that hood is definitely looking pretty juicy. And this price action of a beautiful 618 bounce, we're below the Magic Fibo on the daily, so that's still somewhat bearish. But we get a pop, we get above that. So if you're more conservative, we start closing above 112, say 113 up here, then you start targeting 147, 155, followed by 178. But this bigger picture, 3.2, the bearish move, this is what I love, that low to that high. This bearish move, if this is just the A and this is the B and we do a C, we typically would go at least toward that 195 before we set up a much bigger decline. Right? But I'm more bullish. So bullishness puts us into insane levels way up here at that 270-ish. Wow. From 80 bucks. So if this thing could do that massive move higher, then HODU is going to do like the quadruple. We double in price, get to 160, which again is below that. This will quadruple in price. So it would go from 12 to 24, then 24 to 48. Well, this would go to about 160 area. And if it pushes the outer limits, this thing could go way higher. All right. And what do you get by holding this? You do pay a little fee. So it's not like it's totally free and it doesn't cost you anything. There's a little expense ratio, a little less than 1%. But if I can get this thing to quadruple, and during that period, every quarter, we get a little something, something and some dividends, then yeah, it looks pretty interesting, say the least. And UNH, just to go back and revisit, we got the low, we got the high, we're holding on to 618. Is this thing ready to go blasting off and go to these extensions? There's some pretty big upside on this. If it plays out, that is the plan. And we do have earnings out in April. So we got a ways before the next earnings up here. And the recent earnings we just had in January was kind of hit or miss, a little bit on the upside earnings, a little bit down on the revenue side. But this is a hell of a pullback. And I like what I see so far. Rally up, bounce. Now what we want to see eventually during this next one is a rally up, another 618 retracement like Meta did. Meta did the bigger retracement followed by a smaller retracement to set up the much bigger upside. Well, this one's doing the same. If it works, this thing could go in the 7, 8, 900 range. Easy. What? Double? Triple? Yeah. Amen. And the bigger picture, you can see that high to low sets up these numbers. And what has this thing done? It just corrects and does, corrects and does. So no reason to believe we don't have an opportunity to go higher. And what else is of interest on that? I believe I got it in here somewhere. Do I not? Yeah, there it is. We have higher time frames oversold. Daily's oversold, looking for that bounce. That's why we got into this. Monthly. Don't have enough data on this one, so I'll go to the primary. Look at the monthly. Well, this is the daily on this one. Reversing. Looking for a bounce. Weekly. Oversold territory. Looking good for potential bounce. And even the monthly. Kind of in oversold territory. So Mr. Tucson is disengaged, not quite yet officially, but that high, low, higher, low, we disengage, we'd go back to the high and make new highs. That would be pretty substantial based on that monthly slingshot here that's almost disengaged. And when I have a monthly oversold, a weekly oversold, definitely an oversold territory, and the daily starting to reverse, good signs we're likely to see a bounce coming out of this. And the fact that it's holding a 618 retracement out of that, that's very appealing too. And your 3.2 low, high, higher, low, got the same extensions in here. We're looking at high probability 400s, 500, and if we get some sort of blow off top, we can push up into the upper quadrants off the bigger high to low. That's the 700s pushing that 900 up here. See it? Beautiful. So there you have it. These are some things that are setting up, and I like what I'm seeing. But what I wanted to show you is in MetaTrader and NinjaTrader 8, you do have right here drawing tools for NinjaTrader 8. You go under your Fibonacci retracement or extension. It has all those preset numbers in here for you. You can color code this any color you want through the properties. You can click on that and go into properties, and you can set up whatever colors you want, whatever numbers you want in there, and set it up based on that. Got it? So for example, you click in here, go to properties for my Fibo, drawing tools. You can set your numbers in here, where the high and the low are to get it exact. And then of course you can set up your price levels. Each one that's in here is already in here. And there's a color, you can reset it to a different color. So whatever color you prefer. And you can see that's the 100%, that's the 0 line, that's your 100 line. Then you go in here, there's my 1618, my 2618, et cetera, 3618. Onward and upwards we go, 423.6, and make your own colors, et cetera, et cetera. Got it? So in closing, got a lot of these potential trades with these beautiful pullbacks setting up some potential massive moves higher, and why I like, instead of just always using options with time decay and a lot of other things with options, you have to have the timing exactly right. Where if you use these leveraged ETFs, the timing is not quite as important. Yes, you pay a little fee, but if these things are going to double and triple as potentially setting up, and plus you get a little dividend on those, not a bad deal. Much more better deal. Amen? So any questions? All right, let's continue. What about black gold Texas tea, the Beverly Hillbilly? We're stuck in molasses, my friends. We're stuck. Zoom this in, got nothing but lines. Separate it, and you still see nothing but line. But I'm going to take all this off and let you see the main thing we've been watching is this prior swing point up here at 66, top of the resistance box. And we touched down on the Magic Fibo, and we've been chopping. Just a chopping and a grinding. So, is it possible that black gold is eventually going to break out? You betcha. Highest of highest probability, we're going to get a big run on black gold Texas tea. But based on the price action, we probably need one more flush. All I can say is we start closing above 66, then it sets the tone. We can start targeting 70, 80. If we don't, and we start closing below the Magic Fibo slash, that I believe is that $58 target. So where does that come from? The recent low to the high. You got your 618 right around that, looks like 59 and change. So we break below the Magic Fibo and we close below 59. That sets the tone. We go into a lower low. Low 50s, upper 40s, right? Why is that important? Because Harold, if I get a ring, ding, ding, ding-a-ling-a-ling, ding, we get a alert that says, hey, by the way, Black Gold Texas Tea Beverly Hillbillies is sitting at $50 or lower. I have a strategy. My strategy is to instantly start buying UCO, leveraged ETF. Because once we get down here, I'm expecting Black Gold to do a big bounce. And big bounce on the primary means double times 2 bounce on the leverage product. Amen? Any questions on that? So, more than likely, we're going to break down. If not, and price says, nope, that's not the plan. All this chopping and grinding, we're actually going to go higher. We need to close above this pink box, setting the tone 68, 69, 72, 79, 82, etc. This is very big. We got a previous swing point high up there. We got a previous swing point high up there. So even if we close above 66, this does not guarantee we're going to that 90 to 100 target. It would say we'd go to 70, 72. We start breaking above this target. Then it kind of says we're definitely going to test the prior one here. And we finally break that one. It's over, and we're going to make a run toward that $90 to $100 retracement. What is that 90 to 100? It's simply from oil price all-time high down to this low currently. We do a 50% slash 618 retracement, 90, 100. And that, my friends, is a very high probability we're going to go testing that. But based on the chop since this back in 2023, all this chopping overlapping, I kept saying for months, lower high series, we'd eventually need a lower low. We got that. Then from that swing point low, we got almost identical price action, and we got similar type of thing, and we ultimately made yet another swing point low. The plan, like I said, is if we do get that push lower at 50 and lower, that is a trigger to go buy some UCO. Again, I can't tell you what to do. That's my plan. That's exactly what I'm doing. I already have some UCO in the mix for adding more to the potential and having a resting order down here. So you go to UCO, anything in the mid to lower teens or lower is a beautiful buying opportunity. So whether you nibbled here, you're waiting for that last push, all I can say is if I have resting orders down here, so if anything gets to 16, 15 or lower, I really want to know when oil's at 50 bucks or lower, whatever this is. If it's at 16, I'm buying. It's at 15, I'm adding. If it's at 14, I'm adding. 13, 12, 11, anything down in here when oil hits 50 and lower, I'm going to start buying, preferably in the hundreds of shares, and work on that big bounce and push higher. All righty? All right. We've covered this in great detail, but even this most recent price action dictates we'll probably need one more flush. Even though we bounce nicely, I mean, this is a weekly chart. Let me go back to the daily and zoom in on that a little bit. But it's nice bounce price action so far. but it's still withstanding the lower highs. And notice before we got a new swing point low on that one over here, it broke the prior one, not quite this one, but it broke that one. It temporarily broke that one in a wick. And then what happened? Went on to make new lows. So is this still a series of lower highs? So we have this series of lower high trend lines still intact. Prior one broke just a little bit where we tested 7 times and failed. This is the number one. Likely it's still going to fail, but this is still a resistance zone. So as long as we stay below this most recent lower high trend line, below 66, and we break the magic Fibo, right below the magic Fibo is that 59 change target. We close below that, says we're going lower low. Got it? So we get lower low, you know what to do. Boom. Boom, shakalaka. And if you don't want leverage, then you do UCO. USO, excuse me. Non-leveraged. All right. Still think we're going lower low. Salivating for the day. I get this little alert down here. You see that dotted line? That's my alert. When CO crosses 50, man, I'm gonna buy some UCO. Amen? All righty. So watch 66. As long as we stay below this resistance and above the support, expect more chop, 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 grind, chop, grind, chop, grind. This thing can go sideways for a while. And then eventually, kind of we did that many times when we kind of thought we were popping out. You'd chop sideways for a while, chop sideways for a while. So this is inevitable. We don't break 66 to the upside. We don't break the magic Fibo to the downside. Then we're going to chop. But once we do, and we break below that 59 area, sets the tone lower low, sets the tone we're pushing down to low 50s, upper 40. There's the bubble. So I'd have to kind of move this over because price keeps moving on and my bubble is not. I guess I'll just stretch it this way, move him over that way, but the bubble is still looking for the bubble. You dip down in here, I'm buying some UCO. What about gold? Be careful with Mr. Gold. I warned you till I couldn't warn anymore about this vertical parabolic move was likely going to come crumbling back down. Is this the low and we're ready to go breaking out? Maybe. Is this likely going to fizzle and go lower? That would clean this up, right? Why is this? Because this has been very impulsive, obviously, right? It's just a vertical move up. And this looks very impulsive to the downside. So that's still kind of saying this is very much likely your A. And this chop and grind, as long as we're below this and we're grinding, that's more likely the B. And we're more likely going to come down here in a C. Amen? 4,000, 3,800, maybe 4,000, 3,700, somewhere in that ballpark. And if we get that beautiful 3-wave correction, that would set the tone for the next push to go back to 5, onward and upwards to 6. So be careful. Still think there's a good chance we could go dipping further. It would kind of clean this mess up, and especially this very impulsive move down. If you're in an uptrend, you typically get a 3-wave correction, then you continuation. This does not look 3-wave. I don't see it. So this would be the A, the B, and the C. All I can say is, Mr. Tucson, we get that flush down into 4,000 and lower. Buy a little bit more gold. Long-term push toward that 6,000 target. What about silver? Still think silver. It's possible this is the end, but I don't think so as well. This looks like it needs one more flush. I was looking for this thing to flush down and touch the magic Fibo. When this thing was going up every day and I kind of said it, I said, look, the more vertical this goes, this thing could easily do a 50% retracement. No way. It was at 120 plus. No way it's going to go to 60. What's the low so far? 64. Huh. Amen. That wasn't that long ago. I kept saying it. Yes, it grinded higher, but this is psychology of a market cycle. That's what it does. So is this likely the end? We're ready to go breaking out? Possibly, but I still think there's probably a little bit more downside. I'd like to see it come down in this $50 range. Kind of extend this down a little bit, come back to this plateau area, a true psychology of a market cycle. Then we could look to reload the boat. All right. So I don't think this is the end of the silver craze. No, but this thing needs to correct further. Would be ideal to straighten up that big bull run, this impulsive move down, and give us finish that correction. And then, but remember what we said. Oh man, 120 went to 60 lickety split. Just like I told you, it's going to be ugly when it happens. It's possible that was enough. I was looking for the Magic Fibo and a little bit lower because of this consolidation zone over here where we kind of broke out from. And when your bubble bursts, you typically go back to the base camp. So be careful. Not looking for this to go breaking out just yet. Long as we're below this prior swing point high there, no way we're going higher. And once we take this low out, what's next? Well, you got the Magic Fibo, and then you got that extension down here about 47. So that's why I'm looking maybe 50. Beautiful. Let's continue. What about Bitcoin? Is this the beginning of that bounce and breakout? We went to 60,000. That's a very strong support zone. Dipped down to 60 and immediately bounced back in the 70s. And now we're chopping. Are we going to get this low chop and then break down like black gold, kind of chopping lower and grinding lower like oil did? Or is this thing going to give us a bigger retracement back toward the Magic Fibo, sitting up here about 93 to 94,000, 95 area? Well, I still think there's a good chance we could go visit 90 to 115 area, which would be way up here. And be careful that I don't think this is the low for crypto winter. Too early. Typically, you top out and you go 10 to 12 months. So that would push us down into our nibble zone, which is, I made a bold statement, not a prediction. I leave that to the prophets. But you set an alert where Bitcoin hits 50,000 or lower. Again, I can't tell you what to do, but man, that is a replay of 2022. When I told you when Bitcoin was at below 20,000, I said it's a steal of a deal to buy Bitcoin below 20,000. You will regret that you didn't take advantage of this because this thing is due to rip to 150. We got to 126 and change. Is that the end? Well, it's not 1,000% written in stone, bet your life. It's no way it's going to go to all-time highs again, but it's not looking good. So all I can say is whether we go up here, then lower, I don't think this 60,000 is the end. I think it is still going to go lower before we're done, the crypto winter. And that is, here's my target zone, somewhere around that 50 to 30,000 range. So Harold, any day, week, month, weekend, whatever, you can't buy like the leverage product on a weekend, but you can buy Bitcoin any day, time, week, night, day, Sunday, Monday, Tuesday, any day of the week. That you can go to crypto.com, you can go to Coinbase, Hood, A lot of those that are in the US, you can buy Bitcoin and $1 worth, $10, $100, $50, whatever you got. You get to 50,000 and lower, it would behoove you to buy and hold it till the next 3 years, till we get into late 2029, as we have another halving cycle in 2028, right here. And what do we know in the history of Bitcoin? And people, my wife, he was reading some gurus out there talking about Bitcoin that, well, it's supposed to be great. Now it's terrible. Look, it's destroyed people. They were buying it up here, it destroyed them. Well, you don't sell, you just hold it. And yes, it's going to hurt, but the cycle has been here. Harold, 4 times in a row. In 2012, we had the first halving. It ripped higher, 12 to 18 months, went down much lower. Doesn't look like it much on here because it just looks like a flat line, but it ripped higher, crypto winter low, going into the next halving, 12 to 18 month run, crypto winter low, 12 to 18 month run. After the next halving, crypto winter low, 12 to 18 month run, crypto winter low, 12 to 18 month run. Why would this cycle change? Because we got ETFs and we got some other things in the mix. That's a little different. But the big dogs, the big whales out there that have thousands of Bitcoin, they still hold and control, even with a lot of industries using Bitcoin, et cetera, et cetera. Well, they go, we can't use this in the financial system because it's too volatile. Depends what you're using it for. And eventually you'll be able to use Bitcoin to buy groceries, and this more and more places are starting to take it. You got Bitcoin ATM. It's starting to take over, just like the internet. What was the internet? Who's an idiot putting a computer in his garage? I got my dial-up phone from my home. Why would I need a cell phone? Why do we need computer? What is the internet? It was with, what's his name created? I forgot his name. He created the internet. Okay. Well, anyway, it was the internet, and it didn't mean anything to anybody. Well, crypto doesn't mean anything even now. It's still so under accepted right now. But look at what it's done. It's rinse and repeat, rinse and repeat, rinse and repeat, rinse and repeat. And there will be halvings indefinitely for like another 200 years. So every 4 years, it's going to have a halving. 12 to 18 months in its history of inception, it made big runs. 12 to 18 months. And who could have guessed, who could have thought, what happened when we got to that 126 high? We're at our 18-month zone. Halving was in April of 24. April of 25 was 12 months. May, June, July, August, September, October, exactly 18, well, yeah, exactly 18 months. Got it? So I'm not trying to tell you, Mr. Tucson, because of ETS, because of all, well, we can't change that cycle a little bit and this thing can make that last run. We did that back here where I showed you we had that big correction and then we still made a new high, but we were at 12 months, 18 months. This one got the big pullback at 18 months. So that's why it's looking more and more like crypto winter. Again, all I can say is I don't care if it's tomorrow we're down at 50,000 or lower, or it's the end of the year, we're pushing October, September, summertime, wintertime, whatever. It hits 50,000 and lower, that's when you should start to add to your position and hold it till we get to 2029 and the projected path. Once we finally get a low, and if this is the high, we'll get a low, then it can kind of set the tone what the targets are going to be. And let's just clean some of this up and potentially throw something out there. If it makes the same type of historical moves in the ballpark to what it's done each time, and you take all this off, and that's just from, prior moves, et cetera, et cetera. So I'm going to clean all this up so we have a clean chart. And you're probably thinking, well, it's about time you do that, Gary. I'm tired of looking at the 52 billion lines. Well, here we go. We had the 2022 crypto winter low. I guess we could even go further back. Let me go to like a weekly, stretch this out a little bit more so we can get these numbers. From the prior high to the low, we went up to about a 3618. This was overabundance on that move. And we look at the most recent one from the high to low. We went up 1618, not quite the 3618, 2618, 3618. I was thinking we probably wouldn't go this high. We'd go here, a little bit higher than this prior move, but we still went close to a 272. Clearly hit a 1618, right? So let's do the math on the next one. What if from the 126 up here, we come down to 50,000, just round it off about 50 or close to it, 49. Let's split the difference. I said 50, 30, let's do 40. 40. Right about there. Come on, stop. Right there. Well, what if we do come down here at 40,000? We're looking at minimum 180, probably more like 200 to, I'm thinking in the hundreds, 230, 260, where we pushed this last time. So we'd be in the hundreds of thousands, like I was thinking. When by late 2029 is kind of the plan, somewhere up in this area. Rinse and repeat. Having 12 to 18 month run, crypto winter low, start to buy at the low. You go into the next having 12 to 18 month run, crypto winter low, you buy here. 12 into the having, 12 to 18 month run, crypto winter low, still to be determined. I don't think that 60,000 was the low. I think we are going to go lower. And then I'll be telling you when I'm going to start nibbling, get my hunger strike on somewhere in probably mid to late 26, or any day that I hear Bitcoin hits 50,000 or lower. Amen? And we start buying some Bitcoin. If you like, you can buy some leverage product. Then I'm going to do all the above, add to my position on Bitcoin, etc., and look for the next push in the 2029 area. And where we'll be looking, when we finally get the high, we finally get the low, minimum probably 180 from what? 50, 40,000, 40 to 40, 80, 80 to 160. It's more than a quadruple. I like it. I like it a lot. So no matter what they said, well, they were shocked that this happened. That can't happen. We got IBIT, we got ETFs. How can that happen? It's the history of this product. That's what always happened. No reason to believe it's not going to happen until it does something otherwise. And this wasn't it, obviously. So in closing, I still think Bitcoin is going to make a run. I don't mean to all-time highs, but some sort of deeper correction. So we're in that 90,000 to 115 area. Looks like a good one. What is that? That's just your 618 type of retracement. From the high down to the low, you look for 618 retracement. That puts us in the 90 plus thousand. You push the 786, which is up here around that 101 area. And I'll take this other one off. You see too many lines. That was the prior one before we made yet another new low. That was off to 80 down here. So I'm going to remove that because we did get a new low. Now we can see, let me take that one off. Nope, not that. I want to take this future move until we get there. So we have a high, we have a low. We got our 618 right around 101. We got our other one about 113. So this is why I'm looking for this thing to make a move somewhere between 90 to 115, a green box, somewhere between a 50/786 retracement. And if this happens, Mr. Harold, James, Ian, Mr. Tucson, Alan, if that happens in a beautiful three-wave move, I'm going to bail on everything on this run, sell it, take more profits, just like we did that big run, took profits. Now we're doing potential another run, put a little something, something. And then when it happens, I'm going to sell it. Even though if this thing goes to break out, I'll miss it. That's fine. I'm going to look to close here. And then when it gets down there, I'm going to reload. So if I bought some at 60,000, is that bad? No, because I think it's going to make a run even higher before we're done. I don't think, again, just to take all the lines off, I don't think this 60,000 low is the low. I think we're going to go lower. Kind of stretch that out, bring this in. I still think we're going to go lower before we're done. And I still want to look this push later into the fall. But again, I'm not concerned. I'm not going to buy it until it's in the fall. I'm going to buy it tomorrow if it hits 50,000 or lower. Next week, next month, or if it drags on and we don't get to 50,000 and lower until we hit 2027. Don't care. 50,000 and lower is a trigger, like oil prices at what? $50 and lower to buy the UCO. Then that triggers me to buy some Bitcoin, buy some maybe leverage, however you want to trade it. All right. All righty. That means Ethereum is in the same boat. Ugly, gnarly. This thing could still get up and get out of here. There's still a lot of advancements on that blockchain, and all roads lead this thing going much higher, certainly. We're still at a higher low. That's good. We're below the Magic Fibo. That's not so good, but this thing could go giddy up and get moving, but it needs to start. So even if this is the end and we start crypto winter and we push, I don't think this is the low when we're done. So I'm really looking for some sort of correction and then another push lower, which will probably put us into the single digits. So I'll just throw that out like Bitcoin at 50,000 or lower is a good opportunity to buy. Ethereum in triple digits, meaning below 1,000, is a good deal, right? So if you see Ethereum anytime below $1,000, that is a great buying opportunity. Amen? Today, tomorrow, next week, next month, pushing to 2027, doesn't matter. It pushes below 1,000. That's a good buying opportunity. And when do we hold it? Till the next Bitcoin halving pushes toward 2029, and we watch Ethereum make its run into much higher stratosphere as well. Okay? So, in closing on both Bitcoin and Ethereum, I do not think this recent low is the end of the party and we're ready to go ripping higher. It's possible. I do think we're going to go ripping higher, but it's in a corrective mode and we're going to get one more low. So before crypto winter is over, I think we're going to get down probably later into this year, somewhere in the late 2026, or there's a caveat, or we get to 50,000 and lower, that's your trigger to look at adding. Ethereum, we get to 1,000 or lower, that's another 50% decline. We get to 1,000 or lower, that's a trigger to start adding. Whether you do leveraged or you do just Bitcoin and Ethereum and a crypto broker, it's up to you. Game on, my friends, game on. Ethereum below 1,000, Bitcoin below 50, game on till 2029. Okay? Any questions? So we just rinse and repeat, rinse and repeat, rinse and repeat. Quite easy. Anything else? So circle the wagons. Mr. ES is more bullish than bearish. We closed, made all-time highs. We closed above the 618,786. And I'm not trying to tell you that it's just going to go big green candles like this the next couple of days and we're reaching these targets. But these targets are definitely a high probability, just as eventual bubble hunting up here is extremely high probability. I do think we're going there. Now, could that be we go up here, we do a 618 retrace, then we reach the targets, we do another retrace, and then we stair step our way up there? Yeah. Or it can just go ripping. This thing could just catch wind because we're only talking in the neighborhood of about 100 points. I mean, ES could do that in a day, right? Look at that big guy right there. It went from a low 67.50 to a high 69.60, 200-point gallop in one day from the dip and then the rip. So are you telling me ES can't move 100 points to get there? You betcha. All I can say is if it does dip, I'm looking to buy and shoot for these targets. And if we even get the much bigger dip, like we're talking about with potential of NASDAQ, and we get this dip to actually come down to Magic Fibo or a little bit lower, it's salivate country because we're still going up there. Whether we go up there now, we go up and pull back to get there, or we pull back further, make a new low, we're still going to get to these bubble hunts. NASDAQ, be careful because, again, this looks like it needs maybe one more flush. Yes, I was all about buying that daily reversal. It was on the chart. Be in your position of authority. This thing could definitely go, and I still think it's going to go bubble hunting toward the upper 27,000 range. No question. But are we going to fizzle and go lower first? Or are we going to finally start closing above that 25,700 to set the tone? We're going to these other targets like ES has, IWM has, the Dow has. Is this thing finally going to catch up? Or are we going to get one more flush? Again, either way, force price to prove it. But if you do get the flush, don't panic, celebrate that we can buy in the 23,000 range, getting a new swing point low down here. We could celebrate maybe in the 22 or 23,000 range to then still go up to 27,000 and higher. Amen? All righty. And even the Dow, like we told you for a long time, when the Dow wasn't really participating and it started to pull back, we kind of talked about that going into the end of the year. We'd get a Santa Claus rally, but we'd get this pullback that we're going to 50,000. I kept saying it. We're going to 50,000. We're there. Now what? Well, we got 51, 52. We got some more extensions up here. How high can we go? This was the bubble. We're there. But we don't have the uniformity. We don't have ES at its bubble yet. We don't have NASDAQ even further away from its bubble. We do have the Dow in its original bubble. ES, we actually hit the original bubble and we increased it to 72 up there. So, yeah, why don't we think this is the end of the run? Because we hadn't looked at it today, but you remember our heat map. Heat map, schmeat map, Vern. We want to see what? How many companies within the S&P 500 stocks are above their 200 moving average? This needs to be at 80 or 90. 80 and higher. At the same time in which the Russell's at 80 or higher, and the Dow is at 80 or higher, and the NASDAQ is at 80 or higher. Got it? If we get that trifecta, or at least sometimes I don't look at the Russell, but Russell's been really coming on as of late because it typically didn't go to 80s and 90s, typically like the other three. But we get the Dow, ES, which is S&P 500, and the NASDAQ all at 80 and higher, preferably higher, like pushing 90s, then we're ready for Elizabeth. I'm coming to join you. And a big, big correction. Got it? So we get all of these charts into their bubbles, and we see the heat map showing 80 or 90, 80 and higher for the NASDAQ, for the Dow, for the S&P 500, right there, S&P 500, then we're game, ready, set, match, ready to go. And be sure to take profits and look for a massive type of correction, whether it's a true financial debacle or just a huge pullback. Amen. And I'll be here to guide you step by step, day by day. That's the plan. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all.